Let's take a closer look at China's economy with Thomas Hayes joining me now via Skype. Thomas is the founder, chairman and managing member of Great Hill Capital. Welcome back to the show.
Thanks for having me, Rochelle.
So a lot of economic data came out over the weekend from China, including trade, producer prices, inflation, foreign reserves data. So a lot coming out, but what are you really keeping an eye on? What are the biggest surprises you saw in this latest data?
Well, I think the trade balance number was good. Exports minus imports was 56.5 billion. That was much higher than estimated of 51.5 billion. And then when you look at exports, as you pointed to earlier, they were less than expectations. Exports were up 19.3% versus 20.8% estimated and down from 32.2% last print. This is largely attributable. You had a few factors. You had slowing demand for some of the medical supplies that were very high earlier in the COVID and the pandemic, as well as the consumer electronics slowed a little bit. And then imports also missed expectations, 28% versus 33% estimated, down from 36%. There's another factor at play in these numbers that we should mention. You had basically a once-in-a-year flooding situation in the Henan province. That's largely populated area, so that impacted some operations and some facilities. So all in all, there is some slowing, and the Chinese government has responded accordingly. They lowered the reserve requirement ratio for banks, and they said more is on the way. And this lowering of the reserve requirement ratio will free up about 154 billion of lending for small businesses.
And to that point then, how are small and medium-sized businesses faring at the moment?
Well, you know, the problem is the uncertainty. The Chinese government has a zero COVID policy, and this has hurt small business and consumer sentiment. So if you look in the developed world, you've seen the consumer really bounce back strong. Part of that is because how the stimulus was focused. So in the US, it was direct payments to individuals. So the consumer's doing very well in the short term. The Chinese government took a longer-term view, and they did the stimulus in terms of infrastructure, construction, manufacturing, et cetera, which will have a better longer-term impact. But in the short term, the consumer hasn't benefited as much. And the other thing that's bothering the consumer and small businesses is because of the zero COVID policy, these sporadic shutdowns like we've been seeing recently with Delta, where rather than live with the virus, you shut down a whole region that has infections. People can't plan. They don't know if their factory is going to be open tomorrow. They don't know if their business is going to be open next week. So rather than having the confidence to spend, they save the money because they don't know what the future holds with policy and with regulation and with shutdowns. And we did see that in some of the airline. This was the largest week-on-week drop in terms of seats offered, are down 32% because of this short-term Delta variant. And you even saw this morning, Goldman Sachs took their third quarter GDP estimates down materially, down from 5.8% to 2.3%. However, they do believe that the Chinese government will get COVID under control quickly, and they've taken up their Q4 estimates up to 8.5% from 5.8% to finish out the year at 8.3% GDP, which would be well above the government target of plus 6%. So, you know, a lot of mixed things, a lot of moving parts. The key is to get this Delta under control so you don't keep having these shutdowns.
So then what should we read into all this data, especially as you mentioned, these concerns over the Delta variant of COVID and now clouding the global outlook? A lot of people looking to China's recovery as a sort of bellwether as to how they might do. What should people really take from this in terms of any sort of return to normalcy anytime soon?
Yeah, I think it's a bad news, good news. So the bad news is these shutdowns create uncertainty. The good news is the government has recently stated in the past week that they're going to inject more stimulus and a looser policy into the government. If you recall, about 6 months ago, I was on and I said, you know, the Chinese government may be tightening a little bit too soon here before the rest of the world gets COVID under control, despite the fact that they had it under control at that point. And that kind of came back to bite them in the sense that things have slowed, but they're responding accordingly, and they're responding quickly with the cut in the reserve requirements, and they've signaled that they're going to spend more on infrastructure. So I think what you're seeing around the world is this Delta variant in the case of India and in the case of the UK. It takes about 45 to 50 days to peak and then start to roll over. Here in the U.S., we're on about day 40, day 41. So hopefully we're going to see that same model and trajectory in the next week to 2 weeks. We see the Delta cases peak and begin to roll over. And I think we'll see the same in China in coming weeks. And then those year-end benchmarks that Goldman have laid out of plus 8.3% GDP will realize. But we just don't want to see further shutdowns because that creates a lot of consumer uncertainty and small business uncertainty.
Indeed. Well, thank you as always. Thomas Hayes there, founder and chairman and managing member of Great Hill Capital.